And Ted back here with Bodies and Wicks. I just wanted to do a really short one tonight to laugh. I mean that's what I was doing in my thumbnail. I was laughing because the Shiba Inu project, or the price action that I called, nailed it 100%. And I'm not trying to be cocky, guys. I'm really not. I'm really not trying to be cocky. I'm trying to show you that smart money really works. That this trend line that was going up, that I'm sure a lot of people, especially on the retail side, thought it was going to continue going up on, just follow that trend line all the way up. Now, what that trend line does is it actually provides liquidity. What I mean by that, it means that people are apt to buy right at that trend line because they think it's going to continue going up. And so instead, what the algorithm does, what the smart money people do, is they will go against it. They will short sell against you to take your money because they know you have a short stop loss. So, but before we go any further, if you could, just for smart money, what I'd like for you to do is give a subscribe to this channel. At least give this a like, because I'm going to show you exactly what happened. And if you're a Shiba Inu person that thought that it was just going to continue to go up, I'll show you, kind of where you went wrong and why smart money that, opened my eyes to these kind of things and helped me continue to become more profitable. So that being said, hello, we're talking about Shiba, okay? And I know you guys love this coin. I am personally not invested in it. But I know a lot of you are, so this is why I want to help out. Now, to me, Shiba really doesn't do it for me because there's no real utility in the blockchain world, in the crypto world, as compared to things like Covalent, or even though Covalent's still really small. Supposedly it's supposed to interact with data with all the networks, and not really 100% sure how Covalent is supposed to work, but to me, when I read about it, I was like, that's cool. I was like, that has some good utility. Or Helium. Helium is going to be, to me, it's the most ambitious blockchain / crypto project out there. I mean, they're really trying to cover every inch of this planet with the helium miners and the helium, receptors. They're low powered, low radio wave, so that everybody can have affordable data, affordable internet. You don't have to pay $60-$70 a month for, what I do is I have Wi-Fi here, and then I have my own phone. But even with my own phone, I have one line. Everybody hates having, or every wireless company hates having just one person on their line. So we get the crappiest deals. I'm paying a lot for just having one phone, to be honest. But if I did, sorry T-Mobile, but if I did Magenta Plus, I could get new iPhones for free. But if I get a second line, that's just gonna push my internet bill, or not my internet, my phone bill up even more because I added a second line. Luckily, I have some kind of insurance on it, so in case something happens, I can always get a Yeah, but I don't even know if that insurance even exists anymore. Anyways, other back to crypto that have use cases. Of course, Ethereum is one of the biggest ones. Polkadot, Cardano, all those things have great use cases. So, whenever you're and this is not financial advice. So whenever you're looking into coins and what you should invest in, or put your money in altcoins, um, I'm just saying meme coins or this dog coin race, whatever is happening, it doesn't do it for me because they're just meme coins. Now, maybe I'm wrong. Maybe the meme coin has a certain store of value, and who knows? Maybe down the line, I'll be paying for my shoes at Target or Berkshire Hathaway's one of their shoe stores, and I don't know, Reebok or Nike, I don't know, whatever he owns. Maybe I'll be paying those, Shiba Inu, that'll be the currency I'll be using. I don't know. I really don't. But I'm just saying it just doesn't do it for me. Okay. But anyways, I took a quick snapshot of last night of what I thought was going to happen. Here it is. I'm going to put this in front of me so it makes it look like I'm looking at you guys. But as you can see, I thought maybe it might, kind of get up close to where this double top had and then maybe drop. And why did I think it was going to drop? Okay, I thought it was going to drop because there was 4 consecutive daily fair value gaps. And so depending on where you would put your fib and where I was taught to place a fib is you make a high, right, and then you make a low, and then the next high that closes above that above the previous high that goes on to make the wave or whatever, that's where you put the bottom of the fib. All right. When it gets to the top, all right, then and you can see it giving a definite retrace back, that's where you put the top of the fib. Now, that being said, at the 61% of the retrace and below, will be what's called your golden pocket. That will be where your smart money looks to buy. And the reason it looks to buy in that area is because, well, think about whenever you go to the grocery store, would you want something that's 10% off, or would you want something that's 61.8% off? You'd want something that's 61.8% off, right? Okay, so that's basically the gist of it. So whenever I saw Shiba Inu have this kind of I don't even like calling them trend lines because they're to me they're a product of they're a product of basically bouncing off of bullish order blocks, bearish order blocks, and breakers and whatnot. So that's how I see price action. Other people look at this and they see a triangle or a wedge, or something like that. That's whenever you learn smart money, you don't see those things. Those things don't exist because that's not how price works. The algorithm works on certain price levels. It remembers those price levels, right? And so that's part of the algorithm. So that's why I said, whenever it gets, up to a certain point, it would probably drop down through this phantom trend line. I'm sorry if you were the ones that thought this trend line was, just going to keep going. But, you could see just in that area where you have a little bit of a spike down here. I'm not for sure what price that was. Let me throw this over here. It looks like it was somewhere around quadruple 057 or something like that. And then also the one that's set for the daily fair value gap, the bottom of that one, maybe it was the bottom of that one, the quadruple 053. I thought it would at least get below those, enter into the daily fair value gap. Now remember, I also set that fib, and I set that fib would, it would get below the discount rate. And that discount rate would be the 61.8. And that first daily fair value gap pretty much, or the discount ran right through the middle of the discount, or the daily fair value gap. So this is what you see behind me is what I predicted last night. All right. Now, what we will do is that we will move on to what actually happened. 1 second here. Again, you would always think I would have all of these things completely ready, but sometimes I slack here and there. Whenever this transforms, my head may look a little bit different, but just don't worry about it. All right. So this is what is happening now on Shiba Inu. Like I said, it did exactly. I mean, I'm not trying to toot my own horn, but it did exactly as I described during the video yesterday. If you watched the Shiba Inu video yesterday, whenever I said it's gonna fall, right? It's gonna fall probably to the discount, probably to the daily fair value gap. And if you really want to hone in on it, yes, it went right down through the daily fair value gap, went right below both of these lows, just like I thought it would, right? And it came close to the 70.5%. Very, very close to 70.5%. Remember, those are the levels I told you to keep as your fib, because these are the levels that most of the time things react off of. For what reasons, that I don't know. But this is what was taught to me by my mentor, Inner Circle Trader. 61.8, 70.5, and 79, right? I found another decent instructor of smart money. He sounded like he went through the Inner Circle Trader mentorship, and he added his own 88.6, and I've added it in there just to see if it works. And you know what? Believe it or not, there's actually been quite a few reactions off of that level. So I've left it in there as well. But as you can see, if you're one of those people that thought, again, phantom trend line, that's what we call it. We call it a phantom trend line because it's not a real trend line. No trend lines are real, right? There's nothing that trends forever, right? You're always going to have something. It may be a short-term trend. Yeah, that's for sure. Nothing wrong with that. But to throw a trend line out there and act as if that is end all be all and nothing is ever going to, uh, you know, beat that, or it will never drop through that, is kind of asinine or ignorant to think like that. You know what I'm saying? So what we did is we put the fib. All right, so here is what I was talking about. You have a high, then you have a little bit of a drop, and then you have the run above that high. So the low just before the run is where I would put the 100, right? And then, of course, you would put your 0 at the very top, and then your 61% would be your discount. I may not have it exactly. So, and to me, it actually dropped quicker than I thought it would. So, like I said, I'm not the best of, well, I'm good enough that I can see the price action. I can see what's probably going to happen. But I thought this would probably actually come up a little bit higher. Maybe close towards even with this guy's before it dropped. Or what I thought it might do would actually break this liquidity. That way it would try to fake out the people who would think they were going to catch a breakout and then drop, but did not break this height. Okay. But instead, what it did is like as soon as it came back over and hit this phantom trend line and bounced up, that is what got everybody excited, thinking, hey, there's a trend line here. We're going to, go all in as soon as it comes back to the trend line. And what did it do? Ran right through it. Because it could these algorithms can almost feel the liquidity, where the orders are, and that's what I mean by liquidity. Okay, so whenever it floats back this way, and people start putting in their buys, on leverage, or maybe you're trying to spot trade and you think, okay, well, it did this big jump and then it's fallen back. Here's a good spot because of this phantom trend line. I'm going to buy right here. The algorithm knows these things. So whatever you think that retail has taught you, and you think it's a good idea, do the opposite. It's generally the opposite is what is actually going to make you money. So instead of actually buying here, short here, because then you're going to go into the liquidity, and then take out all of those people who were trying to buy here. All right. Now, what did it do? It came down here. It hit the 50, bounced up, and I'm sure a lot of people chased it here, because the 50, it looks like it made an equal low with this guy right here. Maybe some other bodies as well. Maybe some people chased it right here. And then as soon as it got above here, what did it do? Boom, sold off. And it sold off, and it completely filled the daily fair value gap. And I'm on a 1 hour chart here. But the interesting thing is that even though it did, even though on a 1 hour chart, it did break all of this, the bodies stayed above the discount price, which is, to me, is actually really interesting. If we look at the 4-hour, it might be a little different. No, 4-hour, same thing, just above the discount price. So, but it did get all the way down here to the almost the 70.5. Now, the reason I think it got there is because of, see this bearish candle right in between the two. It's probably behind my head now. Right in between the two daily order blocks. That guy right there. Here, let me do a little highlighter thing maybe. That guy right there. That would be considered an order block. Why? Because it is your last low, right, before the highs take off and closes above it. So with this candle closing above this, that makes this an order block, a bullish order block, I should say, meaning that whenever it returns to that level, you should expect it to start going back upwards. That's what a bullish order block is. Bullish order blocks can also be very shallow, meaning that, let's say, this thing closes above here, right? And then it starts coming back really quick and pulling back into this red. That is when I wouldn't expect it to hit the top, or maybe even in the middle, before it starts rejecting the other way. That one you might want to wait until see if it gets toward the bottom. But either way, if it goes through the entire candle, more than likely it's not going to back up, bounce out and start having any more bullish momentum. At that point, once it gets lower, it's going to have more bearish momentum, unless you see something just below this the spike down. Say there's a fair value gap right here, or maybe there's a breaker just below it. Then it might spike through, hit that either that fair value gap or that breaker, and then continue on upwards. But if everything is balanced, meaning that each wick is basically touching between candle to candle, then I would expect it to return back to that area, and then I would expect it to return back to that area, and then move on, right? So if we're on the 4-hour, like I said, came down. There you go. There's the 4-hour order block. Went right through the daily fair value gap, rejects, boom, moves up. And if that is not any closer to what, it's pretty much exactly what I said whenever I was drawing this out yesterday. Except for I think I put areas coming out, of that. But either way, I was trying to say, hey, this is probably where it's going to drop to. And I can't even see that, to be honest. Let me move this on my different screen. And let me see where I put the low. I pretty much put the low where I thought it would go would be to the bottom of the daily fair value gap, as my example, right? And I just kind of gave two examples. I thought it would ride up a little bit higher again, maybe get a little bit above there, and then drop. And then maybe this one would come down to here, which would be equal to the other guy. And I will actually, hold on 1 second. Having to move things around a different. There we go. Okay, so what I thought might happen, and I'll do a 15-minute. Let's just go to 15-minute chart here really quick. I don't know why I need an alarm. But what I thought, and instead of it stopping at the 50, I thought it might stop pretty much in line with this guy right here. That's where I thought it would stop instead of right here where it did. And it stopped and it went a little bit more bullish. And the whole reason it did that was so that people would buy and chase it. 100%. That is what the algorithm does. Algorithm wants you to see that it stopped and see it. And if you're watching it and you're going, oh, well, it stopped right here and it's running up again, let's chase it. You have to think about what's below. All right. Now, the reason it did stop there, let me take a closer look at this. I think it was because there was probably an order block here. Yeah, looks like it. Okay, so let's say here is it's probably behind my head again. Nope, just a little bit above it. Right there. There's a little red 15-minute candle, right? I'm putting it on top of the body, right? So on top of the body, it looks like it came down, hit it, bullish order block, moved up. Now, why did it stop here? Bearish order block, right? There you go. Bearish order block is because it wasn't ready to continue being bullish just yet. So it jumps up into here. Also, another bearish order block. Well, it really didn't get into that one. It was more so this. And then after that, drops. And then boom. All the way down to the daily fair value gap. And then moves back up. And now it looks like it's hit this right here. Depending, let me get to the hour. Yeah, I don't know if I would consider that a breaker or not, because it looks like it stopped right at that same level, and whenever it moved, the time frame moved over to the 15-minute or the 1 hour, it moved up and then came back down. So I wouldn't consider that a breaker. But it's interesting that it did actually stop there and now move backwards. I think it's probably making people think that this is a resistance point. I don't think it is. I think we're going to continue to see it move up now. Okay. It looks like it is moving up. So if you have an hour, boom, hour fair value gap right there. So I'm just going to put FVG 1 hour. Even though that didn't come through the right. FVG. FRVG. FVG 1 hour. Okay. And now just watch that. All right. So if you throw it on 15 minutes, does jump up in here. I would think it might sink into this a little bit. And also you have, see right here, I'm going to move this daily fair value gap over just a little bit, just so you can see these 3 or 4 bearish candles. All right. These would be considered a bearish order block, considering the wicks have stayed within the boundaries of each candle. See, now if this candle right here, had a wick that went way up here or something like that, that wouldn't really be considered a bearish order block. All 4 of those candles anyway. You would actually have to then stop at this one and then look at these 2 going down, and then that would be your bearish order block. But considering this one stops here, goes down, all the wicks stay within kind of the same frame, right? I'm going to put this here, and I'm going to color this a little bit differently, make it look a little bit different, because I think this is where we're going to see it turn, right? Make it thicker. Text, and I'm going to put plus OB. Plus OB as in order block. So I think it's going to fall into this 15-minute fair value gap. Again, what is a fair value gap? Fair value gap is, well, it's a 1 hour fair value gap. So within 3 hours, there's going to be 1 hour to where the hour on each side doesn't completely come down in touch. That's called a full balance, right? If they left a little bit of a gap, that's the fair value gap. That means there's a little bit of a price void in there on that time frame. Now, larger the time frames that you see, the more I wouldn't say the more apt they are to retrace back in that area, but fair value gaps do act as pretty much magnets, right? Like I said, you put 2 magnets together, but then once they get close enough together, it'll be like they almost automatically flip and then reject and turn around, right? So that's what I would be looking for. Or it looks like this one actually maybe already came into the fair value gap. Yep. Or I thought that would have been the one that would have made the fair value gap. Either way, it looks like SHIB is starting to move, and the thing is that right here, right? So even though you did have, this would have been a bearish order block, this last green candle. Again, everything's fractal, all right? So last green candle up, this one closes below it. That makes this a bearish order block. So this one's already come up and touched the bearish order block, came back down. Now this one's also moved down a little bit, and it's pushing itself back up. So now we're back in a bullish sentiment, okay? But what did it take to get there? It took that daily fair value gap, and it also took that phantom trend line to be crossed, okay? So now the question is, where do we think that's going to next? Right here, of course. Right here. All right, you got these two equal highs, right? So I wouldn't be surprised if it does get to whatever this level is. 75, quadruple 0, 75, 11. Again, quadruple 0, 75, 11. I feel like I'm announcing bingo. Yeah, I would think, let me see what the high is here on this guy. 73.70. High 73.90. Okay, so yeah, somewhere around in that area. Right? And then once it does get to those areas, I think I explained this yesterday, and I apologize if it looked a little blurry yesterday, is because I put it through like I said, I did 4 videos I think 5 analysis yesterday in a row, and I didn't want them all to be on one long thing because nobody would watch it. You guys, I mean, who's gonna watch 2 hours worth of analysis? So I tried to make it as quick as I could, or I split it up. And I put it in my iMovie, and I didn't realize how bad you lose quality by putting things through iMovie. Okay, so the question is, where are we going to next? Now, once it probably could, again, you have to think about what somebody that has a deep pockets thinks. All right, it could come up here, equal to this, and then start dropping, right? And then everybody's going to start chasing it. But what you don't realize is that it could come down here, maybe not down here, well, maybe down here, to where you have a bullish order block, turn around, come back up. But generally, I would think, hold on, I'm just going to do a bunch of these really quick and then reset them here in just a second. What I would think is that if it's going to do something like that, it's probably going to fall to an area like this. That way, when people start chasing it and they think it's safe to chase, it turns around and goes the other way on them really quick, so they get caught in a trap. All right. And let's see if on the hourly, if there's something like that they could get caught in a trap. Or what it could do, it could come up back up to here, hit the back of the trend line, maybe at the same level as here, or hit the back of the trend line at the same level as these guys. That would probably be more interesting, and also more telling. And then what would happen is it would probably drop to here, somewhere in between here and here. Why would it drop? Why would it have an area to drop to and not a specific place to drop to? Because you have a breaker, right? So you have a low, a high, a lower low, right? Whenever you have a low, a high, a lower low, the bullish candle, move it across, that is considered your breaker. Now, as long as it's going to run it, and what I mean by run it, I mean actually run through this area. If it takes some time and struggles to get through this area, something like what I just put down probably won't happen. All right. Instead, what could happen is that you could see it maybe get there and then pull back just a little bit to here, or like I said, back here. One of the two. I think it's going to be one or the other. Why? Because this is what starts the 1 hour bullish order block. Or it could just come all the way down here back to this 1 hour fair value gap, because that's what it's going to be attracted to. And then this guy is going to come up probably to right here. Actually, what I think it would do, is it would push through it, probably hit the back of this trend line, right? And then push backwards, make everybody think that this trend line is what is pushing it backwards. All right, fall back into the breaker after it runs it, and then boom, take off. Or maybe not boom, take off, maybe boom, get above this guy now. What I mean by this guy, I mean this guy. All right, these two equal highs right here is going to also be another area of interest. All right, so then it could pull there, here, here, and you usually see this a lot, again, with these types of, equal highs. You'll see it do something like this, and then all of a sudden, it'll finally take off, and hopefully get above a new high. But before it gets there, it's got some moving to do. Or I could be, this is what I'm thinking, right? I was right yesterday. I'm hoping I'm right today. I could be completely wrong. But then again, I really don't think it's going to try to drop into these other daily fair value gaps. I really don't. Especially after it creates the 1 hour, fair value gap for here. But it could. There is a possibility you could see it drop all the way down into here, where, this bullish order block starts, even though we did have this area. This is probably behind my head. Sorry, geez. Even though we did have this one little spike down, come down and hit it. This is also on a 1 hour, 1 hour, 1 hour chart. I'm not for sure if the 4 hour would show it or not. Hold on. But it could. It's possible that it could come up to, something like this, or maybe even the bottom of the breaker, and then drop entirely into this area right here, which would be the bullish order block. And then finally starting to make its way up. But with the way crypto has been bullish lately, I don't think that's going to happen. I think it's going to be more something along the lines of this. Right? At first, the reason I made this video is because I wanted to be like, ha ha ha, told you guys so. But I realize that's really not a good way to win over an audience. I'm not a cocky person. I just want, I just see it on Twitter and I see it in other places to where people, especially Tradingview of all places, to where people put their ideas, and I just look at it and I face palm all the time, and I'm like, do you not see this, and this? It's not going to do that, and I try to be nice in the comments, and I'll try to give them a different perspective. But sometimes most of those people kind of block me. I don't know why. But anyways, this was supposed to be just a quick update on Shiba Inu. I didn't mean for it to go 46 minutes long. Love you guys. Keep your pants on, and yeah.